We've got net apartment demand is back in positive territory. Consumer confidence is moderately returning, and inflation is moderating, and mortgage interest rates are declining. Now that's good for home buyers, but in terms of just general consumer sentiment now, and we'll get to this in the following article, things are improving, and it's not maybe dramatically so, but it is the result of a months-long trend of improving sentiment, improving apartment demand, and an improving inflation situation, such that I don't mean increasing inflation, I just mean that inflation is going to be, and probably is, less of a burden on renters than it used to be even a couple months ago.
It's interesting, the decline. Now June would be early for to see like a seasonal decline, but it is interesting. We've seen this decline, in a period, call it Q4 at least of 22. That typically there's between end of Q4, beginning of Q1, usually things are pretty slow. And so I don't know if there's any correlation or if there's any exacerbation of the declines and the slowdown. And also on the other side of that coin, I think it's good that we're seeing some positivity, but without the monetary policy that's going on, we probably would see more. But it's not, we're not making up from the last couple months. But at the same time, the negative last couple months was also a little bit of a correction, a resizing from the last year and a half. So I think we have to have some context. I mean, like we don't, just looking at the size of these bars. I mean, the red ones, I don't like seeing red, but that's a lot of green.
I'm really glad that you mentioned that, because that was one thing I forgot in my notes is, yes, there are all these stories of why things should be going up, and the consumer sentiment, the inflation situation, the mortgage rates, whatever. But also there's just like pattern recognition. Every time things go up, things usually, if they go up dramatically, they're going to maybe go down to adjust, and they've already gone down. Maybe are we going to see a little bit of a bump up just from like pure mathematics?
I think a lot of it does come to, I mean, I think there's some, laws of, the universe that end up coming into play, and whether you want to get into, Fibonacci, retracement patterns, or whatever kind of cycle, whatever you want to talk about. But, what comes up must come down, and there's reversions to the mean, and that happens, it happens, especially in a really efficient market, which real estate is not. But humans are also a big market, and we're relatively efficient. We're making decisions all the time. And so we're talking about sentiment. It's, it's on track. Now, the difference here is obviously these are surveys, and, how do people respond? So there's a lot of different ways you can parse this data. But I'd say, Matt, I'm hoping it is more. I mean, Q1 still a cold quarter. And so I'm hoping it's not just the lack, seasonal depression, and it's not just things getting warmer that's making the sentiment a little bit better. I'm really hoping that people feel better. But, that's in contrast to, I'd say, if you've been watching the media the last, couple weeks, since some of this, the banking, Silicon Valley Bank, First Republic's going to absolutely get tore up. I mean, might just completely fail. I mean, again, like, I don't know, earlier today, I think before the markets open, it was down like 20%. I mean, almost like trading a penny stock. And we don't have to go off on that tangent, but what I'm saying is, everyone's saying like a recession is just about inevitable. And we talked about last week of like, okay, well, maybe it's actually not, because if you're so certain, I'm like taking the counter trade to your absoluteness. But I'm just the sentiment, and maybe it's delayed, because we've also said every 3 weeks it changes. Yeah. So like, do we need the next, the next sentiment survey? If it's negative, maybe we just know that the sentiment surveys, just are lagging, and things are moving. It's so volatile. Things are moving just too quickly that these surveys are just they're less useful, because they're not as high frequency as is required to make decisions about today versus you're talking about a month and a half. And there's going to be similar correlations talking about the just on the time delays and leading and lagging indicators. When are you looking at information? RealPage versus Fannie Mae. Yeah. The next report, Matt, Fannie Mae's from Q4 of 22 mostly. Yeah. RealPage is Q1 of 23. So it's obviously a different time period. It's going to look a little bit different. But typically, multifamily and real estate, going over quarter by quarter numbers was plenty of high frequency. Yep. We're just in a different time. I think that's kind of the subtext again. And for the past few weeks is this is a time
strangely enough, where like it probably does behoove you to follow the month by month, follow the quicker frequency.
It's month over month even. I mean, really, it's a day by day. I think is like right now is unrealistic, but like we really need a week by week.
Yeah,
and I know, Ms. Matt, you're putting in a couple of reports. I mean, and you some of the data you only had was quarter over quarter, and you're like, I at least need month by month. Like,
month by month.
This isn't going to work. So what else on this RealPage? What other conclusions? Or
this was a short report, but I would encourage people to go there and also click through on that RealPage report that has a link to their Q2 multifamily like webinar. It's like a multifamily update, and if you click there, fill out the video. You can also download what they have is a 38-page, pretty decent report in and of itself. So maybe if you don't want to watch that video, you download that that PDF and you'll be set.
Matt, are you suggesting that people on the internet are going to want to read a report over watching the video?
I always read the report over watching a video.
But that's 100% that's why.
Maybe if anyone's like me.
Well, but that's why we do what we do. It's what you do. You're the one that reads the report.
Yes,
so
yes.
You don't
Everyone else, video.
I mean, read the report.
All the report.
Read the report, but you don't have. That's the whole point. Not everyone has time to go through every single report. I mean, you can select a few. But I mean, if you're listening to the Gray Report, you're getting the Gray Report newsletter, graycapitalllc.com/newsletter. You're kind of covered. Like you're going to be. I mean, you're up to speed. You're not going to miss a beat.